Senator Reid directly challenged Treasury Secretary Scott Bessent over President Trump's proposal to cap credit card interest rates at 10% for 1 year. Reid questioned whether Bessent genuinely supports the policy and pressed him on whether stronger protections should be extended to all Americans, not just military service members. The exchange then shifted to concerns surrounding Fannie Mae and Freddie Mac, raising questions about governance, independence, and the handling of taxpayer-owned assets.
Economic advisor, Mr. Sir, do you support interest rate caps to improve affordability on credit?
I wholeheartedly support President Trump's policy, and I think that what you've just said would be in direct contrast to what Senator Warren said about this administration favoring the big banks. But those are facts.
Well, I don't think my statement indicates at all what Senator Warren said or meant. I wanted an answer. You gave me one. Yep. But let's just, look at the current situation. We already have legislation that protects service members by putting a 36% cap, not just on credit cards, but all credit relationships. And it protects them from being exploited. And as in my youth, I was a company commander and saw it firsthand. Would it make sense as a first step to provide a 36% interest rate for all Americans, not just service members?
36% doesn't seem like much protection to me, Senator.
Well, it's better than some of the things that are being presented to service members without the rates. These new plans to buy commodities, and sometimes the rates go to 500, and still today. You have entrepreneurs who are charging extraordinary rates, and particularly to vulnerable populations, which I know they don't congregate at Harvard Square, but they also don't hang out in New Haven either. So I think that would be a sound step, Mr. Secretary.
Senator, you haven't seen all of New Haven.
I haven't, but I've seen a lot of it, the parts that you might have missed. The situation at Fannie and Freddie is significant. We have significant federal interest financially in Fannie and Freddie. But under the director, Mr. Pulte, these taxpayer-owned assets are no longer in compliance with the law or with stock exchange listing standards. Pulte has appointed himself as director of both boards, even though the law says, quote, the director may not hold any office position or employment in Fannie or Freddie. A majority of the Fannie board has not been determined to be independent. The audit committee is no longer comprised entirely of independent members. And the governance has been sacked by political affiliates. These all are prohibited by law and regulation. So how will you bring them into compliance, Mr. Secretary?
That would be FHFA, not Treasury.
Excuse me. You are one of the largest, or the taxpayers are. You provided them, Treasury did, not you personally, a $200 million bailout in 2008. And you have no interest in Fannie and Freddie?
I'm very interested in Fannie and Freddie, and I'm interested in fulfilling the mission to the American people to keep mortgage rates low.
What about following the laws?
So again, you should ask Director Pulte. I do not see I don't think this creates a.
Well, all right, you have nothing to do with Fannie and Freddie. Director Pulte has said that you and him are, quote, very aligned, and we meet regularly about the conservatorship. By the way, it's in conservatorship because of Secretary Paulson, your predecessor. According to Fannie and Freddie's annual reports, the companies, quote, continue to rely on financial support from Treasury pursuant to our senior preferred stock purchase agreement, under which taxpayers own 1 million preferred shares and a warrant to purchase up to 80% of their shares. Treasury staff manages those shares and warrants for the taxpayers. Your predecessor, Hank Paulson, placed these companies into conservatorship. So you have the premise or the power to place Fannie and Freddie into conservatorship. I would think that that gives you a little bit of leverage talking to Mr. Pulte about why he's not following the law. You're reneging on responsibilities, Mr. Secretary. And you're also, being the senior person here, your behavior to some of my colleagues is absolutely childish. Thank you.
Thank you, Senator.
Senator Reid began by referencing President Trump's January 9 announcement, calling for a one-year 10% cap on credit card interest rates. Reid pointed out that Americans are often paying interest rates approaching 28% or 30% and asked Bessent whether he supported the president's proposal. Bessent gave a clear answer, saying he wholeheartedly supported President Trump's policy. Reid then turned to existing protections for service members, noting that federal law already places a 36% cap on certain forms of credit. Drawing on his own experience as a company commander, Reid said he had personally witnessed vulnerable service members being exposed to predatory lending. He then asked whether extending a 36% interest rate cap to all Americans would be a reasonable first step. Bessent pushed back, arguing that a 36% cap did not appear to provide much protection. Reid countered that it would still be an improvement over some financial products carrying extraordinarily high rates, particularly those targeting vulnerable consumers. The senator emphasized that some entrepreneurs and lenders charge extremely high rates, with some products reportedly reaching rates of hundreds of percent. His argument was that stronger protections could help prevent vulnerable Americans from being exploited. He then shifted his questioning toward Fannie Mae and Freddie Mac, emphasizing the federal government's significant financial interest in the two taxpayer-backed mortgage companies. He raised concerns about the leadership and governance of the organizations under their current director, Bill Pulte. Reid argued that taxpayer-owned assets were no longer complying with certain legal and stock exchange requirements. He also questioned Pulte's role on the boards and pointed to concerns about board independence and the composition of audit committees. The senator suggested that political influence was increasingly affecting the governance of Fannie Mae and Freddie Mac, raising broader questions about whether these institutions were being managed in the best interests of taxpayers.
The exchange began with a debate over credit card interest rate caps, but quickly expanded into a broader discussion about consumer protection, predatory lending, and the management of taxpayer-backed financial institutions. Reid pressed Bessent to explain how the administration's policies would protect ordinary Americans from excessive borrowing costs, while also demanding accountability over the governance of Fannie Mae and Freddie Mac. Bessent defended the president's 10% credit card proposal, but Reid continued to challenge the administration over whether stronger protections and greater independence were needed to safeguard consumers and taxpayer interests.